Donald Trump was just handed a $7 trillion debt bomb from the previous administration that is set to be refinanced in 2025 this summer, and with U.S. national debt over $36 trillion. In this video, we have to discuss exactly what's taking place right now with the debt ceiling, irrespective of who's in the White House, and what's happened since 1981 with the Treasury market, bond yields, when the next recession is likely to come in when we look at the 10-year Treasury to the 2-year Treasury, inflation data that just came in for February, and why this is such a big deal coupled with the unemployment rate, and why the Fed's 2% inflation target is bogus from the get-go, on top of the Fed's expectations for the next meeting coming up on the 19th of March in just a few days, and Donald Trump's monumental goal to have zero capital gain tax for anyone making less than $150,000 per year. Plus, when you stick all the way to the end of this video, you will have a solid understanding of where we are in this macro market cycle and what's likely coming next for the crypto market, for XRP, Bitcoin, global liquidity, and the Ripple versus SEC lawsuit that you do not want to miss. We have some massive news to cover for you guys today. If you're wondering if the crypto market's going to crash in 2025, we'll stick all the way to the end of this video. I know you're going to love it. With that being said, comment 777 if you're feeling blessed, if you're feeling bullish. Let's run it. All right, bull runners, welcome back to the channel. So the first piece of news that is absolutely massive is what's taking place right now over in Ukraine. Listen to this.
Today, we made an offer that the Ukrainians have accepted, which is to enter into a ceasefire and into immediate negotiations to end this conflict in a way that's enduring and sustainable and accounts for their interests, their security, their ability to prosper as a nation. I want to personally thank, we both want to thank the Kingdom of Saudi Arabia, His Majesty, for hosting us, for making this possible. They've been instrumental in this process, and we're very grateful to them for hosting us here today. And hopefully we'll take this offer now to the Russians. And we hope that they'll say yes, to peace. The ball is now in their court. And but again, the president's objective here is, number one, above everything else, he wants the war to end. And I think today Ukraine has taken a concrete step in that regard. We hope the Russians will reciprocate.
So while a lot of people are giving Trump flack for that meeting that he had with Zelensky and saying that he severely screwed up, well, he was playing 5D chess there. And so now he just simply has to call Vladimir Putin, get him to agree. So this is what America's about. It's not about warmongering and keeping never-ending wars going that cause billions of dollars in taxpayer money to be funded for pointless stuff that is not pushing society forward. It's about true leadership, which is knowing how to end something that shouldn't have started in the first place. I thought this was a great comment by Nathan Walters here. Peace through strength again. The guy they said would start World War III just brokered a ceasefire in Ukraine. Meanwhile, the same people screaming about democracy and how Trump is a threat to our democracy were happy to keep the war going. Can you see how contradictory that is? So Trump is not only delivering on that front, but what's the next thing people are giving him flack for? It's the tariffs. So in the short term, that did cause a scare in the crypto market, but in the long term, that's going to be good for the country when we talk about taxes. Pay close attention to the rest of this video. Thought this was another great post here. The most powerful reversal confirmations in the true stage of the market cycles aren't written in the crypto charts. They exist beyond them, hidden in liquidity flows, macro agendas, and the silent hands shaping the game. Those who only stare at candles miss the script entirely. So that's what we're going to talk about in this video, the more macro script that is going to directly affect the crypto market this year that we all have to be ready for, because the U.S. national debt sitting at $36 trillion. Well, here's a post that Trump made on Truth Social, December 29, 2024, and he couldn't be more spot on here, because the extension of the debt ceiling by a previous Speaker of the House, a good man and a friend of his, from this past September of the Biden administration to June of the Trump administration will go down as one of the dumbest political decisions made in years. There was no reason to do it. Nothing was gained. We got nothing for it. A major reason why the speakership was lost, it was Biden's problem, not ours. Now it becomes ours. He calls it the 1929 because the Democrats don't care what our country may be forced into. In fact, they would prefer depression as long as it hurts the Republican Party. The Democrats must be forced to take a vote on this treacherous issue now during the Biden administration and not in June of this year. They should be blamed for this potential disaster, not the Republicans. So if Trump is calling this a 1929 crash, we need to pay very close attention here because look at this, a load of debt. The Treasury has about $7 trillion of debt to refinance in 2025 as bond yields are marching higher again. So you guys can see in blue here, this is the maturing debt coming in the summer of this year, and then it tapers off by 2026, 2028, 2030, etc. Now, this is super important because the debt ceiling and gross federal debt in the US from 1981 to 2023 in trillions of dollars has risen irrespective of who's been in the White House. And they like to place blame on both parties. You know, Republicans like to blame Democrats, Democrats like to blame Republicans, and it just creates division in the country. So we need to look at the bigger picture here because in green, you can see the debt ceiling suspensions where they just push it back, they kick the can down the road. In purple, we can see extraordinary measures to exceed the debt ceiling, which happened under the Biden administration. And in red, you can see Republicans in office and Democrats in office. And so while the Republicans were in office, they just suspended the ceiling. Same thing for Democrats as well, too. Nobody wants to deal with the problem because it is so big. And the problem is not necessarily the U.S. national debt, although it is a big problem. It's $36.5 trillion. It's the interest on the debt, because when we look at the bond market right here, you guys can see, as the US 10-year Treasury notes have dropped in price, will bond yields go up because they're inversely correlated, obviously. Well, the interest on this debt alone from the year 2000 over the past 5 years has risen so much because of the bond yields rising. If we see the bond yields rise even more, then the interest on that debt is going to be so out of control that they will never be able to cover their bills. And the only thing that they can do is simply raise the ceiling and print more money. Otherwise, they have to default on their debt, which has never happened in the history of this whole debt ceiling situation here. They've always suspended it or raised the ceiling. And just recently, extraordinary measures were called into effect to raise the debt ceiling. So this is one of the craziest times in human history. And so here's what we need to look at. The 10-year Treasury constant maturity minus the 2-year Treasury constant maturity that basically maps out the difference between the 10-year yield and the 2-year yield. So if I pull up on the top of the chart, you guys can see that the 2-year is at 3.995%. And the 10-year is at 4.3%. So if the 2-year continues to fall while the 10-year either stays where it's at or goes up, what we will see is this yield curve inversion go further into the positive, because when we are inverted, meaning we're just below zero in the negative here, like we were in June of 2023 when it was negative 1.06, well, that's when the 2-year was up here at like 4.5% and the 10-year was right here at like 3.6%. So there was a difference of negative 1.06%, which is why we were in the steepest yield curve inversion since all the way back here in the 1980s. So this is why Trump is calling it 1929, because the past 5 times that we've gone from a yield curve inversion to spiking back in the positive, we've seen a recession marked in. And you can see this gray vertical boxes here as a recession. The last one was really quick, and this was a government forced one just because they locked everyone indoors. So it was pretty quick, but then they signed the CARES Act into law. They printed a lot of money, so it wasn't really that long of a recession. The previous one was in 2007. You can see we went from like negative 0.11, and then once the recession got marked in, but was the financial crisis of 2008, 2009 during the subprime mortgage crash. Before then, we were like negative 0.45, and then the recession was called in by like March of 2001 and then ended by like November of 2001, while the yield curve was going drastically back into the positive, and the 10-year started outperforming the 2-year. And then the time before then was after 1989 going into 1990 and 1991. Then before then, we were in 1981 to 1982. And there was a couple recessions in the 80s. The other one was like 1980 to July. So from January to July. So it's no doubt about it that things are looking pretty iffy right now, because we just went from negative and we're in the positive right now. So a recession, in my opinion, right around the corner. I think it's coming this year. And I think we'll see it as the 10-year starts to outperform the 2-year, and we'll see the 2-year start to drop even more than where it's at right now at 3.99%. We see this descending resistance right here. We broke this uptrend. Since the 3rd of May, we are forming higher highs and higher lows. So you can see this ascending support right here. We broke it on the 1st of July of 2024. And as you can see here, there was support at like 4.1%. We crashed down. Now we're bouncing back up into the support as resistance. And I just expect the 2-year to continue to the downside. Now, that doesn't necessarily mean that the 10-year is just going to go up even more. The 10-year could drop. It would just drop slower than the 2-year. Because if we draw this ascending support right here, we can see that the 10-year did something similar. It broke below this ascending support, and now it's bouncing back up to retest it. Even though the bounce was higher than how much the 2-year bounced, we're now seeing it pull back to the downside. So this is going to take some time to play out for the 10-year and the 2-year while this yield curve inversion spikes even more into the positive. And what will affect this will be what the Fed does with their effective federal funds rate. So the Fed has a dual mandate. They adjust the effective federal funds rate based on what inflation is showing and based on what unemployment is showing. So inflation came in lower from January. As I showed you guys in my video yesterday, I talked about how the data is actually much lower. And I believe in March, it's going to come even lower than February, signaling the Fed to cut rates here soon. And we'll see if that happens. But that's my expectation, because if you guys didn't watch my video yesterday, go check that out. And I talked about this right here at about the 23-minute mark. And you guys can see on this chart that shows truthful data for a transparent economy. And if we zoom in here, you guys can see in January of this year, we were all the way up here at 3%. Sure enough, January came in at 3% right here on tradingeconomics.com. But then look after that, what happened in February, we dropped down all the way to about 2%. And then we saw it bounce at the end of February going into March. And then Trading Economics clocked that in at 2.8%. So that's why a lot of this inflation data is fugazi, but nonetheless, it's coming down because look at where it's at in March. It spiked all the way down to like 1.4%. So we might see a bounce here and maybe it closes at, 2% to 2.8%. If that data is accurate and it comes in lower, then that would get closer to the Fed's 2% target. Now, the challenge here is the dual mandate because unemployment needs to stay beneath 4.2%. Jerome Powell said I believe it's 4.4 is what they're watching as a recession indicator, because if I zoom out on Max, this has a 100% hit rate where the unemployment has spiked. It's signaled a recession the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 out of 12 times going back to 1948. So if this has a 100% hit rate, this is the most important thing that we need to pay attention to then. So over the past 10 years, we saw the last time that this took place was February 2020 till April. That was COVID. Everyone was locked indoors. Of course, they couldn't work. So unemployment spiked from 3.5% to 14.8%. But if we zoom in recently to where we're at right now, we can see unemployment ticking up from April of 2023. It was at 4% for January. It came in at 4.1 in February. So depending on where it comes in at for March, if it ticks up, then that will determine what the Fed does for their effective federal funds rate. So on the CME group right here, we can see expectations for the next meeting. 98% are expecting the Fed to keep rates current. So the majority are not expecting a rate cut for this FOMC meeting in a few days from right now on the 19th. Well, the 7th of May, we can see 82% are expecting them to keep it flat again. 17.6% are expecting a rate cut. And it isn't until June that those numbers drastically swing in favor of a 25 basis point rate cut. 68.8% by June. And coincidentally enough, that is right when the $7 trillion of debt is set to be refinanced. As Trump said right here on Truth Social, December 29th, calling for the Democrats to take a vote on this issue now and not in June, when Trump's administration has to basically decide what to do for that load of debt that's maturing. Now, in regards to the 2% inflation target, Bill here, who's the founder and CEO of Abra Global, the leading crypto asset manager and prime broker that provides institutional clients, including hedge funds, venture capital firms, crypto ATMs, and miners with a comprehensive suite of trading services for hedging, lending, treasury, and liquidity management. Well, he says the bogus 2% inflation target is generally a function of lifespan. Over 50 years, 2% inflation lowers the value of your cash holdings by 67% off the top. So living to 130 creates a big problem for the inflation fraud. The inflation fraud no longer works as the value of your holdings falls by over 85%. So he says the solution is obviously Bitcoin, because inflation is just a hidden ghost tax. Because think about it. Let's just say you make $100,000 a year. We'll take into account taxes. Maybe you're left with $80,000, not including your mortgage, your cell phone bill, your food for your kids, all the stuff that you have to pay for gasoline and other expenses that you got to cover. Let's just say you have 80 grand left and you only paid $20,000 and you lived on TV dinners and you didn't spend that much money. You didn't travel anywhere. You have no kids. Well, if you saved $80,000 in 2020, well, in 2025, that cumulative rate of inflation hits you at 23.3%. Meaning you've lost 23% of the spending power of $80,000, and you would need $98,000 to afford the same amount this year in goods and services to afford the same lifestyle with the same income, let alone go back to the year 2000. Let's just use a dollar as an example to simplify it for you guys. 85% of the spending power has been lost over 25 years. So that's inflation tax. It is the slow piranhas that just eat away at your skin, and they don't kill you right away, but it kills you over time. And so if their goal is 2%, that's best case scenario if they have it under control. What happens if they don't have it under control? You're screwed if you save dollars. Stack that on top of the IRS tax. Well, SEC's Lutnick says Donald Trump's goal is to have zero taxes for anyone making less than $150,000 per year. Listen to this.
But it sounds like you're saying, trust us. And are you worried that at some point Americans are going to feel like there's a bunch of billionaires in Washington who are playing Russian roulette with our retirement?
$2 trillion deficits don't bother you at all. How could you ask me, while we're running a $2 trillion deficit, and not care? You're destroying the people who have run this country before, are destroying the future for my children and my children's children. I can't have a 50, 75. We have a $36 trillion deficit. And we used to run deficits of 400 billion. Now 2 trillion, everybody's like, who cares? I tell you what, who cares? Donald Trump cares. And when we balance the budget, you know what that means? That means our deficits stop. Interest rates come smashing down. His goal is to have external revenue. You know, the way I think about it, we all are so used to paying taxes. We're so used to it. We have like Stockholm syndrome. You know, don't stop the Internal Revenue Service, God forbid. How about this? The rest of the world leans on our economy, breathes off our economy. Not only is our economy $29 trillion GDP, but we consume $20 trillion a year. We are the buyer of everybody's stuff. We buy everybody's stuff. So who's more important, the people who sell stuff or the people who buy stuff? So we are the buyer of everybody's commodities, products, goods and services. Everything comes from us, right? Let them pay a membership fee. We all understand that model. Let them pay. How about we, you and I, and every single person we know pay less? How about no tax on tips? How about no tax on overtime? How about no Social Security? How about all those things? These are the kind of thoughts that will change America. I know what his goal is. No tax for anybody who makes less than $150,000 a year. That's his goal. And that's what I'm working for.
Now, Howard Lutnick has served as the 41st United States Secretary of Commerce since 2025, and he was also a fundraiser for Trump's 2020 and 2024 presidential campaigns. So you guys have seen Trump announce the External Revenue Service. Well, if he can pull off no taxes with the IRS, that would be monumental. Point blank period, having tariffs on other countries is much better than overtaxing people in the United States to pay down this interest on the debt from their unlimited print orders that the Fed and the Treasury are issuing that caused this $36 trillion in the first place. I mean, do you guys agree or do you disagree with that? Do you want them to tax you more? Do you want them to take more of your money that they're already taking that you don't even see from inflation? Or would you rather have other countries pay that tax and you pay zero tax so you can finally start making more money? Not even making more money, just keeping more money that you already make. That's our goal here on this channel, to properly educate you so you can make more money and also keep more money by knowing where to look. For example, we've been helping businesses get money back from the Treasury and different government programs that they didn't even know existed. For example,
April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 $100,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid.
Now, I thought this was another great post from Bill here saying, y'all never change. Bitcoin is now experiencing its 11th 25% correction in 10 years. And every time everyone reacts like the sky is falling, and every time everyone screams that it's different this time. And so in my video yesterday, I talked about this, showing you guys every single major correction that happened back in 2017. And those corrections were even bigger than the ones we're going through right now, between 30 to 40%. So stacking it up side by side with that bull run puts things in perspective, because this pullback looks, smells, and feels 100% just like 2017. To Bill here, rising fiat liquidity leads to massive asset price gains. So right now, the new admin has decided that we need, number one, lower treasury rates to refinance the debt. Number two, lower mortgage rates to unlock the housing and CRE markets. And number three, lower treasury rates to save banks from their collective insolvency. So China is in a deep recession and needs lower US rates to support its own money printing regime, and print they will. And we're likely going to see massive job cuts via government cuts, tech cuts, and house-related cuts. At the same time, ISM will likely rise for the next several months. All of this tells us liquidity will continue to flow, and the markets will do what they always do in this type of cycle. That liquidity will flow into stocks, Bitcoin, crypto, and real estate for a blow off top before a major crash happens. So once again, buckle up. And when we look at Bitcoin versus global M2, global liquidity, we can see that global liquidity started to tick up while Bitcoin is experiencing a pullback. Now, as you guys know, global liquidity moves first, and then that starts to flow into, risk on assets like crypto or like the stock market, or even real estate or precious metals as well too. So we're due for a pump here soon with inflation coming down. And if inflation ticks down again for March, then with the Fed cutting rates, the next step would be the Fed adding to their balance sheet, because over the past year, the Fed has been tightening. So this makes it more difficult to predict the markets, because with total assets in millions of dollars retracting, meaning the Fed is selling assets, well, they've been doing this since the bear market. So we've seen the first little taste of a bull run while the Fed's been tightening on balance sheets. What happens if the Fed starts adding to their balance sheet while lowering the effective federal funds rate, while global liquidity ticks up? I think that would be a melt up in the market, and we would see a blow off top before the crash happens. So a lot of people are calling for the top to be in right now, but I don't think that's the case. I think we have another bounce in us this bull run this year before a crash happens. And what does this mean for altcoins like XRP? Well, Linda P. Jones said, Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services. Well, she actually quoted Franklin Templeton, CEO Jenny Johnson here, because they filed their S1 document for an XRP ETF. So if he's saying that Bitcoin's the greatest distraction and they're filing an XRP ETF, well, the first thing that I like to do is understand who I'm listening to see if their opinion holds any weight just based on their results in the physical 3D realm. Franklin Templeton is a large global investment manager firm with over $1.6 trillion in assets under management. Yeah, okay, they definitely hold some weight in my eyes. If I'm listening to someone who's a millionaire, a billionaire, well, if they have $1 trillion in assets under management, making it one of the world's largest independent investment managers, if they're saying this about Bitcoin and they're filing for an XRP ETF, that's bullish news for XRP. Now, the price action might not show it on the price chart, but that goes back to what I said at the beginning of this video, sharing this post from Moneytar here about the most powerful reversal confirmations in the true stage of a market cycle aren't written in crypto charts. They exist beyond them, hidden in liquidity flows, macro agendas, and the silent hands shaping the game. So if you're just staring at candles all day, you miss the script entirely. So in the day-to-day, I literally don't care what happens in the short term. I think XRP is just going to range here. Ideally, we need to hold this support here above, $1.90 to $2. If we break below that, yeah, we could come down to $1.50, $1.60. If that were to happen, well, then we bring up some key indicators here like the RSI, the MACD, and then we would look at where the RSI is at. So currently the relative strength index is at 45. So yeah, sure. I mean, if there's another shakeout and this is a failed recovery rally to this descending resistance and we see XRP break support, then yeah, the relative strength index could come back down to like 30 or below 30 into drastically oversold conditions. Then I would personally scoop up a lot more XRP. That's when I would buy more, or I would wait for a trend reversal to buy more. So right now, I'm just patiently sitting. I'm patiently waiting on XRP to accumulate more right now. While we're right in the middle of this range, the relative strength index is at 45. We haven't seen another bullish cross here below 0 on the MACD. Tells me that we're either going to range sideways or we're going to sell off to the downside in the short term for XRP before we see a major breakout. So what I would want to see for a trend reversal on the other side of the spectrum is for XRP to clear $2.80, ultimately $3 right here. That's what I would want to see. This range right up here. So for XRP to break this descending resistance, and if it doesn't get slapped back and do something like this and trend along this descending resistance as support before finally deciding to make a move, I would want to see a major move like this happen for it to hold it as support for several days on end. That's what I want to see for XRP. Otherwise, in the short term, it's looking a little bearish. And that sentiment can change at any moment because of the lawsuit. For example, Eleanor Tourette posted this saying 2 well-placed sources told her that the SEC versus Ripple case is in the process of wrapping up and could be over very soon. And her understanding is that the delay in reaching an agreement is due to Ripple's legal team negotiating more favorable terms regarding the August district court ruling, which imposed a $125 million fine on the company, included a permanent injunction preventing the company from selling XRP to institutional investors. And so the SEC was able to drop the other lawsuits against like Coinbase, Kraken, you got tons of Uniswap a lot easier because there wasn't an injunction. So this is a little bit more complicated. And the argument she was told is that if the new SEC leadership is wiping the enforcement slate clean from all previously targeted crypto firms because it believes regulatory clarity will resolve the underlying issue, why should Ripple still be penalized? Accepting the Torres ruling as it stands would mean that Ripple is essentially agreeing to admit to wrongdoing. That's what the $125 million fine is, right? But now the SEC itself is seemingly unsure whether any wrongdoing occurred. So there's no real playbook for this kind of thing, which could explain why this case is taking longer to resolve than the rest. But either way, the SEC has lost this case, guys. It's done. It's just we're waiting for the formalities to be officially announced here. So in my opinion, when those formalities get officially announced, that's when XRP could see a major spike in price. But you don't want to wait for that spike in price and then start buying XRP on that, because then that's when I think there could be a sell-off right after that. Case in point is what happened when XRP was declared not a security. Look at what happened. XRP spiked in price right here, and it went from 46 cents upwards of 96 cents. Really, really fast, rallied over 100%, and then just sold back down to the range that was at before that announcement, even wicked below it. So how's that even possible? The best news about XRP pushing price up to nearly $1, well, then it gets slapped back down here and consolidates in ranges and even sells off to even 38 cents for months on end after that announcement. Look at this, guys. This was about 357 days, and even before it really broke out, 486 days. So this is why you just have to be very careful buying into short-term news spikes like this. For example, when Trump announced that XRP, Solana ADA were going to be added to a reserve, look what happened here. XRP's price did the same thing. went from $2.17, spiked upwards of $3 right here really quick, rallying over 37%, then sold off immediately the next day after that when Trump announced the tariff news. So I would expect the lawsuit news to be bullish for the market, obviously, when it comes to a complete conclusion, and that to spike XRP. When that happens, we'll see. But I expect that to happen this year, along with an XRP ETF approval, along with the Fed to start lowering interest rates, and for them to just continue printing more money and inevitably raising the debt ceiling again or suspending it, which basically just means they can print more money, which would be the perfect catalyst for the next major move in the market for XRP to go anywhere between my price prediction, which was $5 to $30 this bull run cycle. And then I believe there's going to be some nasty crash coming in Q4 of this year, then leading into 2026, because this is just unsustainable. Coupled with the 10-year to 2-year yield curve inversion going into the positive here, and a recession happening virtually every single time that this has taken place, on top of unemployment ticking up right here on the edge of disaster. If unemployment starts to go above 4.3, 4.4%, then the bull run could end sooner. So we need to watch this very closely. That's why it's important to subscribe to the channel, like this video to stay up to date, because we're making videos each and every single day to keep you guys up to date on what's going on in real time in the markets. And also, if you want to get access to where I learned this information from, well, I have the best research team in the world that shares this stuff with me to share with you guys. And so if you want to be at the cutting edge of what's going on, not only in the crypto market, but in the macro economy with finance, then click the link in the description below. Join Altcoin Pro University. We have over 100 plus expert curated classes that teach you guys everything that you need to know, not just what you're getting here on a daily basis on YouTube, but things like crypto taxes, decentralized finance, researching altcoins. For example,
our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100 plus expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.